Welcome to the Practice Podcast, a show created by lawyers to help lawyers in life and business without all the complicated lawyer language. Let's welcome Bast Amron founders and your hosts, Jeff Bast and Brett Amron.
Hey, Jeff.
Good morning, Brett Amron.
How are you?
I'm wonderful. How are you?
I am fantastic.
How do you feel? What's your energy?
I'm feeling good. Went for an extra couple miles this morning.
Extra couple of miles. So how many miles in total would that be?
9 today.
9 miles. The guy ran 9 miles today, and it's 10. By the way, it's 10 a.m. So
so I apologize. We started a little later because I ran a little longer, and then I had to do a couple things at the house. So
he ran his 9 miles, and he needed 15 minutes of rest. So that's pretty impressive. Well, anyway, happy Friday.
Happy Friday.
Now, what makes you do some extra miles? Like, what were you? Did you plan to run extra, or were you running and you say, I'm going to keep going because I feel good? What is it?
So I've done both ways, but today was I wanted to run a little extra because I'm traveling tomorrow, which is my normal long run day, and so I'm not going to get it in. But I may, when I travel, I don't usually run long distance. So I usually will do a shorter run, 5-6 miles, probably on Sunday. So I just wanted to get a little longer. And then as I was out, I was like, oh, maybe I can go a little bit further. So I went actually probably an extra mile from what I had in my head when I started, just because I felt like it at the time.
Nice. Love it.
Yeah.
I love it.
Yeah.
Excellent. And sometimes you can see John, you'll see Brett in the airport, on those moving walkways, but he runs the opposite way and he's just running on.
Yeah.
Anyway,
that beats
jumping over luggage and stuff like
exactly. So our guest today is John Scott. John is a partner at Anders CPA and Advisors. He has over 30 years of experience, a breadth of financial knowledge, and a deep expertise in advising law firms. John helps firms of all sizes and specialties to maximize profits via cash flow management and KPIs while minimizing taxes with his extensive understanding of the tax code. He leads the legal industry division of his firm's Virtual CFO services, and they offer an industry-leading tech stack that allows firms to make data-driven decisions. He advises on strategies, including staff utilization, cash flow planning, when to hire, creating clear career paths, trust accounting, accounting controls, partner distributions. And he's also the author of a forthcoming book on creating a roadmap to success for law firms. Welcome, John.
Thank you. Thank you for having me. And I did not run an extra 2 miles this morning.
Did you run an extra anything?
Thus far, I've had 1 minute of exercise. My goal is, 45 to 50 a day. And I've been getting that, but it doesn't happen early.
Right. I got you. All right.
Yeah. And it's an hour earlier, so we'll give you a little bit of a break.
I think you're talking to 2 morning fitness guys. So, we're believers in getting it out of the way. Not getting it out of the way, but starting your day that way. Anyway, as long as you get them in.
I get that. And I usually go before lunch. So, because if I don't do that, if I wait to the end of the day, it's not going to happen.
Right. Exactly.
Too many things get in the way. So, John, first, the book. Are you able to reveal the title of the book? Do you have a title?
The book is out. Judicial Dollars and Cents.
Judicial Dollars and Cents. He's showing to us on the screen. This is the podcast, so people won't see that. But can you raise it up again? Judicial Dollars and Cents.
It's a virtual playbook to help law firms achieve their goals. And we'll provide a QR code to you guys so you can put it in the show notes.
Yeah.
Fantastic. That's great.
And where can people, other than obviously in our show notes and the QR code, where can people get it? Amazon or anywhere?
You can find it on Amazon.
Excellent.
Amazon is amazing. You can publish on demand. So you can make changes on the fly. You can put an addendum. In fact, we're working on an addendum for law firm sales and for more KPI information on managing PI firms, contingent fee firms.
Okay. This book, is it focused on a particular type or size of law firm?
No, it really focuses on the 4 key metric areas that we like to focus on: cash, financial, production, and pipeline, and how the non-financial drivers impact how you build a forecast and predict the future so that you can achieve your destination.
Okay. So cash, let's go through those again. Cash,
financial, production, and pipeline.
Production and pipeline. And what are the non-financial drivers that influence those?
Well, if you have an hourly billing firm, it's really rate times hour, right? And from those 2, you can look at your team and determine what they're actually billing, what you expect them to bill, and what capacity is. And depending on your capacity, then you can determine what the size of your pipeline needs to be to fill up that capacity. And so it's not just, I see so many firms, including accounting firms, that put their head down and do the work that's in front of them and hope that good things happen. A lot of times good things do happen. But if you know that you expect 32 hours a week chargeable out of your staff and they're only getting 25, you got to ask yourself, is the work there and they're not doing it, so they're not being managed? Or do I really have 7 hours of capacity per full-time equivalent? And how do I get that? And when I look at my pipeline, mathematically, you can break this down and say, okay, if I have the capacity for $500,000 of work and I close 1 out of 2 opportunities that come in, I need double that pipeline to fill that capacity. And so when you break it down into those metrics, you can start to make decisions on, okay, if we get our work by radio advertising and we don't have enough and we need $1 million worth of pipeline to get $500,000 worth of work, let's increase the spend here. But, let's back up a second. My origin story on all this was I met a very entrepreneurial attorney in the 90s, and he had a niche practice in one metropolitan area, and he decided that he wanted to expand that nationwide. And so what he did is he figured out how to make this flow chart to make a new office work within 6 months. And he wouldn't care. He cared a little bit about the metrics of a city, demographics and size, but he would pick one of those cities where he could find a managing attorney to follow the system. And in 6 months, he would hire a second attorney and he would be at break even and start making money after that. And he did that time after time after time all across the United States. And he built this firm that he didn't even practice law anymore. He just managed a firm.
Wow, that's great.
And what type was it? An hourly billing firm? Was it a contingent firm? I mean, when you went through some of the numbers, right, and some of the metrics, I understand, to me, being a lawyer, it's easier to sort of quantify when you have just the hourly stuff, right? It's just, rate times hour, this is what I pay people, this is my profit. But what about when you have contingency and you have hybrid situations, either flat fee, contingency, not giving away the farm, giving away, because we want people to buy the book, and we want people to listen to podcasts and then hire you. But generally speaking, that seems to me to be a bit harder to come up with the metrics and sort of the numbers in that way.
Well, on the contingency side of things, you're right. It's not rate times hour, but how many cases can an attorney at different levels handle? I mean, I've got a firm that grades its cases A, B, C, and D, and it grades its attorneys A, B, C, and D. The D cases are referred out to another firm. If you're a C attorney, you're getting C cases. You're told what to do in order to move up the food chain to B or an A. Some people, if we get back to how do I forecast, I know how many matters of a particular type that an attorney can handle. And if we don't have that work, we have to go find it. And then your case management system in a contingent fee environment is a gold mine that's underutilized. You can look at the cases that are in that system and determine where on the flowchart of the lifespan of that case those cases are. You can determine a value, an expected value, an expected settlement date. So, right, we get a client that comes in, contingent fee matter, they engage us, we do our investigation, we file. At the point where a court date is set, we're probably going to either settle or maybe go to court. But we know that at that point, a certain amount of money is probably going to come into the firm. And so that's how we build cash flow in a contingent fee environment. And that's how we determine capacity. It's really focused on the data that comes out of that case management system. And it's key that people really understand how their case management system works and that they use it well.
Okay, cool. I think, and by the way, we just jumped in. Usually we ramp up to the substance, but I love how we just jumped in here. I love your topic. I assume, following on Brett's questions, that the law of averages works in this type of forecasting. So the more higher volume of those cases, the more accurate the projections are going to be, because some cases the timing is not going to be. It's less predictable, right?
So it is. And the more history you have, the better.
Right.
I didn't address a flat fee environment, but that's really rate times hour too, right? But You're just predicting what I'm going to charge for lease renewals or review of contracts. And you're going to say, okay, it's $2,000 a contract. Some I'm going to be over on, some I'm going to be under on. But if I'm pricing it right from the start and I track my time, which I have these discussions with subscription attorneys all the time. I don't charge time. Well, how do you know if you're pricing it right? It's not that you are going to be a slave to your timesheet, but you need to put in some sort of standard rate times the hours that you put in to see if you're pricing it right.
Fair enough. Yeah.
So you told us the story about how you met this entrepreneurial attorney. And so how do you go, what happened from there to get you into this field and this niche as a CPA?
Well, I spent 17 years working with this attorney in this firm. And he really did pay attention to the data and metrics. And every month we had a finance meeting where we poured over the numbers. He made decisions based on that. And they weren't always great decisions, but because we were looking at the data all the time, he could course correct quickly. He didn't spend 9 months making a bad decision and then try and turn the ship in the harbor. So based on that, that's what led me to work with more law firms and help them with their management issues.
Fantastic. And so most people don't want to work with law firms, but you've developed a niche there. Are you?
I shy away from doctors. I'm not a big doctor.
You shy away from doctors. Okay, so you have the lawyer bug. So you had the firm's legal industry division. Is it national? The division national, or is it?
It is national. In fact, the virtual CFO division is fully distributed. We have people in 25 states. Nobody comes into an office except for me, and we work with clients all over the country. Doesn't really matter. So
for a lot of firms, our size, mid-sized firms, we have 14 lawyers. Most firms, I would assume our size, don't have a CFO in-house. So if they're knocking on your door for a virtual CFO, what does that look like? Well, I don't mean in terms of fees, but what do they do? What does a virtual CFO do?
So the value proposition is you probably have a decent person running the books, and they're key to us helping them. What we want to do is then focus them, and we bring a team to you on a subscription basis. So you're not committing to hiring a heavy controller, a senior accountant, and a CFO, and a technology person. So we bring all those people on a part-time basis to you to work with your internal team to make the numbers better, to focus on the data, to do a rolling 12-week cash flow forecast so that you can achieve the goals that you've set out at the beginning of the year. I mean, if you think about it, the difference between a budget and a forecast is the dynamic nature in which you look at the forecast and make changes. A budget is in December of the year before, you say, I want to grow 20% and have the same net income percentage. Are we having audio issues?
No, I was.
A forecast, on the other hand, is something that changes all the time based on results. And when you look at, hey, we thought we would be up this many hours in April, but we're not, we have to dig into why that's happening. Because if we don't course correct in April, it's going to be a lot tougher at the end of the year to achieve our destination if we wait to address that issue. So we, on a subscription basis, work with your team to help you make better data-driven decisions.
And I mean, to me, I think lawyers have started to think more like, at least owners, right? Think more like business owners as opposed to just lawyers owning a law firm. When did you see that trends really start to take hold? And what do you see going forward in terms of ownership, in terms of metrics, how to run a law firm? Because I see it being run differently today, at least the successful ones, than they were even 10 years ago.
I think that's the key. It's the successful firms that are growing and wanting to scale are the ones that are treating it more like a business. There are still firms out there that just want to practice the art of law, and I get that. But if you want to grow and scale and build something that you can transition on to someone else, and more we're getting to the point where we'll be able to sell firms not just to attorneys, but to non-attorneys. And you want to have something that's robust enough to get the best price. Even if you sell internally, you want something that's going to carry on beyond you. And so I think to do that, you have to run your firm like a business.
Right. Is there a sweet spot in terms of the client that you're looking at and looking for that would really benefit, in terms of size, in terms of structure, from your services?
I'd say 3 to 30 billing attorneys would be the sweet spot. Once you get bigger than that, you're going to hire your own full-time finance staff. Right. And again, we work with firms that have a decent or good finance staff. We just make their lives better and get better information to the owners. I mean, those people are key to us. They know the inside idiosyncrasies of the firm, and it's important that we have a good relationship with that person. Many times it's a longtime office manager who, as the firm grew up, they said, hey, would you take over the accounting function? And they do. They do their best, but they're not really trained as accountants.
Right. And so what's the role of technology in all this? I think you mentioned that one member of your team is a technology expert. So what's that role?
We heavily use, I call them the Sheldons from Big Bang. I mean, these guys are quants that just sit there and make things more efficient on our end so that we can drive down the effort needed to produce these good results. So they give us templates for payroll. They give us templates for the forecasts that we do, and it pulls data from your systems and puts it in a usable format that we can then present back to you to say, hey, look, if we just make this tweak, if we pull this lever, look what it can do to our cash position 12 weeks out.
And what might be that lever? Like billable rates lever? Like
pushing rates is always a good thing because, you're going to make a valued decision when you draft the bill. So I'd rather make that decision on a higher number. Maybe the type of cases that you accept. What are we really good at? Getting rid of lesser clients. And when you have less capacity, you have the ability to say, okay, we're no longer taking this type of case. It's just not a good fit for us. And so those are the decisions you can make based on the data that you get.
So that's one side of it, right? And obviously in terms of the revenue, in terms of scaling and bringing it in and pricing with hourly rates and, because every year you can increase your hourly rates and make only so much more. But to truly scale and to sort of see the profit rise, you've got to do other things, right? Like bring in other cases and scale a little bit more. But it's also on the comp side. So do you guys come in and help with that as well in terms of the compensation for lawyers?
Yeah, we can help with not only comp for staff, but also partner comp. I mean, if I talk to 10 different firms, they have 10 different comp models. Some are eat what you kill based. Some are the best comp model in my mind. And it's tough to get a lot of attorneys to think this way is what are the firm goals? And then how do I align the individual partner goals with their strengths that are in alignment with the firm goals? And when the firm does better, we're all going to do better. Now, if you think about a football team, and we'll go from college to pros, okay? If you're the general manager, the managing partner of the firm, and you have Patrick Mahomes as your quarterback, you're going to pay him more than the center, okay? He's the rainmaker of the firm. But the center's going to do better when you win 3 Super Bowls in a row. And so you're putting together this team, you're putting people in the right seats on the bus, and everybody's going to be happy if they feel that they're paid their value. They shouldn't be jealous that Mahomes is making more than the center because the center's making more than he would be on a different team. And so when the firm grows and everyone's in alignment and working to their highest and best use, then everyone's going to do better.
And in your example, the only issue I suppose, just to sort of push back a little and hear your response is, it's easy for the center in that example to look at other teams and say, well, yeah, I am making more than somebody who's comparable to me with X number of years at that firm. It's not so easy in our field, right?
Well, I don't know about that. I think you have rainmakers and you have minders and you have grinders, right? And you have folks that,
sure.
The example I gave earlier, the PI firm that rates its cases A, B, and C, there are some C attorneys that just get MBA cases and send out demand letters and they crank them out. They're making a good living. They're perfectly happy staying at that level. But there are other people at that level that want to move up the food chain and get to the A cases. I think it's really understanding your partner group and the mix you have and what their set of talents are and putting them in the position to succeed.
Right.
Playing to their strengths, their individual strengths.
Right. And everybody is a rainmaker. Everybody brings in some level of work. And I can enhance that with some training. But I can't take an introvert and make them the best rainmaker ever. I can make them incrementally better, but not the best rainmaker.
Right. Yeah, I think, to your point, I think it's a little aspirational that everyone's a rainmaker. I get it. Everyone has the potential to make some rain. So on that note, one of the things that I guess you mentioned or that you advise on is creating clear career paths. So what does that mean? Is that a path to partnership or what do you do?
It can be a path to partnership. And I'd like to think as a partner that everyone wants to be partner, but they don't. Okay.
Yeah.
So I think at whatever levels you have in your firm, you need to have clearly defined roles at each level and what it takes to get to the next level. When folks here come in and say, hey, I want to be manager, I always direct them back to the job description for manager and say, okay, go read this, spend the next 6 months building a case while you're doing all of those things, and then I have no choice but to promote you. But when it comes to path to partner, I think firms have to be open and honest about what it's going to take. My daughter's getting married next July, and she's an attorney. She is going to marry an attorney. She said she would never do it, but she found the right guy. And he thinks he's up for partner at a national firm in the next year or so. And I said, well, what does that mean to be partner at your firm? He goes, I don't know.
He has no idea. Yeah.
You need to go ask these questions because maybe you don't want to be partner.
Right. Yeah.
And what does it take to get the votes? I don't know.
Right. Not only does he doesn't know the criteria, doesn't know what it means. And like you said, you introduced it by saying he thinks he's up for partner. Doesn't sound like he's even certain. Yeah. I know that at a lot of firms, because I experienced this, you make partner and you actually make less money than you made the previous year as an associate. That was at least my experience, because when I started paying taxes, I had to file tax returns in multiple states. It was really
and then there's no, in terms of what does it mean, right? There's no they don't lay out what the expectations are. And when you become partner, right? Then they look at you, and I think Jeff has said this a lot of times, they look at you and say, okay, where's your book of business? You said, well, you told me I should work all these hours to get to partner. I did that. And now you're telling me I need a book of business. So, there's conflicting messages. And I think that comes from the top down in terms of what kind of, like you were saying, what kind of firm, what kind of partner, be clear in terms of the direction and play to people's strengths.
If you look at it
for everybody,
you can judge the health of a firm by the average age of their partner group, right? If you have a mix of senior people, more experienced, and younger partners, then I'd say that that firm is growing and is healthy. If they're all more experienced and older and they haven't promoted anybody, that firm's just going to be picked off. It's going to go away. And so that firm is not explaining what it means to be partner, what you need to do. And there should be no surprise once you're in the partner room that, oh, I know you were billing 2,000 hours a year for the last 5 or 6 years, but now you got to go get a book of business. That should have been along the way, developing your own book of business, utilizing leverage to get other people, really partners, especially equity partners, don't just feed themselves. They feed others. They keep other people busy. And that's what helps grow the firm.
Yeah. I think a lot of lawyers, you go to law school and they send you out to go do interviews, to go work at a law firm. And I remember asking I had my little list of questions. What's the partner track? I had no idea what that even meant. You're asking questions. I want to be partner. I don't know what it means. I don't know why I want it. Just like, it's kind of like the path that everyone's on. It's like graduating. I'm in high school and I want to graduate. That's what you're told. You start as an associate, you want to make partner. And I don't know if you've seen this, but I think Brett and I have observed it. I think more and more younger lawyers are not interested in being partner. They're fine, working the hours. I'll work the cases. I'm not really a business development person. I don't really want to do that kind of work. And so, give me a file and I'll work it.
I certainly see that in firms and in the accounting industry as well. I mean, we are the generation coming in now to both professions is more about work-life balance. And that's not a bad thing. Yeah. It's just something that's going to morph over time. And we're going to need some of those people to change their tune and want to be an owner.
Yeah.
Yeah. I was going to say, right. I mean, at some point, somebody's got to come out of that as the next generation of owners, at some point. Otherwise, right, there's going to be nowhere to work.
Right. But I think
it'll happen.
If you explain to that group the benefits of ownership and what that path is, they can self-select out. They could go work somewhere else just to do what they want to do. Or they could say, you know what, I am interested in this.
Yeah. And I think it can evolve over time too, right? I mean, as they're younger and they're coming out of school and maybe the work-life balance, and then not that they don't want work-life balance, but they can figure out as they get older that they can actually do both and have that sort of harmony between work and life and really achieve even greater things and maybe even ownership, as they age.
One of my more successful partners took a long time to make partner because family things were more important for many years. And now this person is an equity partner, has a book of business that includes a couple of billionaires and other very prominent families. This person's not a rainmaker, but the way she works and her mannerisms gets her referred to these other wealthy families. And so it took her a long time because she had different priorities. And now that those priorities have shifted because the family grew up, I mean, she's going to have a phenomenal career.
Yeah. I mean, there is some truth to the idea that you really must develop your skills, hone your skills as an attorney or any, accountant, whatever it is, before you can expect people to want to hire you. But that's not enough alone. It's not enough to just be technically good at what you do. You also have to be personable and helpful to people and want to introduce them, and you build relationships. And so there's so much that goes into being a well-rounded partner in any professional service or firm.
Right. The technical piece is probably just one of 5 core competencies for partners. I mean, not only do you have to be able to work well with clients and be technically competent, but you have to work well with staff. The staff have to want to work on your files. If you're the tyrant, nobody's going to work with you.
That's a tough lesson for a lot of people to learn. And we've encountered some folks along the way who, just needed their eyes open to that. They didn't understand the nuance of, hey, that's another human being that you're asking to do this stuff, which is, I thought we all learned that in kindergarten, but I think some people didn't, maybe forgot to apply it later in life.
It's kind of like hazing in a fraternity, right? I was hazed, so I'm going to haze. I mean, a lot of these folks were brought up with tyrant partners who made that, there's a really good firm here in St. Louis that has little or no leverage. In fact, I asked the managing partner what the leverage was. He said 0.9 as he was looking down, which means they have more partners than staff. And he told a story about an associate was going on vacation Saturday, and a partner came in and dumped a big file on his desk and said, hey, need this by Tuesday. And he called his wife in front of the partner and said, just take the kids. I'll try and join you later next week. That's no way to grow a law firm. But it is the old way. It's what used to happen.
Yeah.
It doesn't.
No, I mean, that's how, not that people came in and dumped a file on my desk on a Friday for Tuesday, but there were holiday weekends that we worked, and it was a different atmosphere than it is today. But I think you have to be receptive to that. And, in terms of people's attempt at work-life balance and harmony, but understanding that, listen, the work has to get done, right? And what do you want to be? What type of lawyer, what type of professional do you want to be? And do you have an interest in growing your own practice and that of the firm? And so there's got to be sort of that balance. And I do think that, how does technology, right? Technology has helped with that. Has it not? In terms of the ability of law firms to grow and scale while still sort of respecting people's ability to have that balance.
It has helped tremendously. And, it goes back to the 80s with, you guys aren't old enough to remember VisiCalc and the precursors to what is now Excel. But the fact that we have spreadsheets that can do things, and today it's going to be another revolution with AI. AI is going to be used poorly and it's going to be used well. But to the extent we can use it well to create efficiencies, we can just do more with the same or less effort. And I think in an hourly billing firm, you need to change your engagement letters to capture that efficiency. Because if it says time and expense or time and materials, and you have efficiencies, you have to pass that on. But if you say, hey, we're going to charge X amount for this project, and you can do it quicker now using AI in a responsible, ethical way, then you can capture that value.
Yeah. Look, I think that's a good tie-in, because the point is, you got to be well-rounded. You got to be technically good. You have to be willing and able to generate business. You have to be willing to make sacrifices. We have a luxury of, we don't punch a clock. So, we do the work, and you do the work whenever you need to do it. And so if you want to leave early to go to your kid's soccer game, great. But then you're going to jump on later to do the work that you need to do. And you have to employ the right technology in the right way. You have to be smart about it. So there's no one magic pill here in professional services. You kind of have to be good at everything, right? Well, John, this is great. Really enjoyed having you on. I feel like we probably could make this a 2-hour segment, because I still have a lot more questions, but I know you probably need to bill some lawyers some fees and get back to writing the book. If you enjoyed this show, please subscribe. Share the show, leave a review. Subscribing to the show and leaving reviews helps others find the show, helps us produce great content, have great guests like John on the show, and allows us to be happy. Or we're already happy, so we're happier. Brett, John, Nelson, I want to thank all you guys.
Thanks, Brett.
Nelson,
thanks, Jeff.
Thank you. Jeff, thank you.
For more information on this show and other resources, visit fastamron.com and connect with us on LinkedIn, Facebook, and Instagram @FastAmron.